Welcome back to Yahoo Finance Live. It has been a brutal week for shares of Chegg this week after the education company reported their first quarter earnings earlier. Chegg citing a hot job market and inflation for a dip in users. But does that tally with where investors think the pandemic darling is headed? Let's bring in Andrew Brown. He is the CFO of Chegg. Andrew, it's good to talk to you today. Monday was a tough day for Chegg when you think about where the results came in. I wonder if you think that either investors or even within the company, there was an overestimation of the market potential for what it is that Chegg offers.
Yeah, it was a tough day from a stock standpoint. From a result standpoint, we were in the guidance range for our revenue for Q1, and we exceeded our adjusted EBITDA. The challenge we had is as we look at the macro environment, particularly in the U.S. We've seen continued enrollment trends that are down. Over the last 2 years, we've seen 1 million students come out of the U.S. higher ed market. And as we survey those students that are going back to school, they report back to us that they're taking a smaller class load. For example, from fall to this spring, they're reporting, taking 8% on average fewer classes, and report to us that they're in fact taking less strenuous classes. You kind of have this trifecta in the US where you've got fewer students going to school, you've got taking fewer classes, and they're taking less rigorous classes. So that's being the macro headwinds that we've seen in the U.S. And there's been a lot of contributing factors that you can imagine. You guys know that the employment is we saw today another 400,000 people employed, employment rate down to 3.6%, and we've seen wage inflation. And when wage inflation occurs, those students. And many of our students, 1 in 3 and 4 say that they actually work while taking a class. Well, if you've got more employment opportunities and in fact you're getting higher wages, you're more likely to be earning than learning. And so that's what we've seen in the US. Having said that, outside the US and some of our other lines, we've continued to see some really nice momentum internationally. And then particularly in our skills business, which while small, continues to see really nice growth rates.
Hey, Andrew, it's Brian Chung here. So, it sounds like the macro story very much relevant for Chegg's performance right now. But I guess the other point to bring up here is that, Chegg is not just a company that's in the business of college education, for example. You have skills training as well, which arguably might be in high demand right now, given the high level of turnover that we're seeing in this labor market. So how is Chegg positioned specifically in that space? Is there actually perhaps a counter-cyclical windfall that could come from that side of your business?
Well, and we are seeing that. It just happens to be a smaller piece of our business today. We believe, as we think Chegg, we envision Chegg, 5 years from now, we see our skills business, like our academic business, being a multi-$100 million business, but it's in its infancy today. Having said that, you're 100% right. We do believe, and if you as you survey employers, skills are becoming more and more important, and I think we'll continue to see that, and that's where we're making some fairly significant investments.
And I wanted to ask also, just kind of as a follow-up here, people who are looking at Chegg, they might have thought about Chegg in its earlier stages as a textbook rental company, but important to note that your business is about 91%, I think, for this quarter in services. So tell us about the importance of that pivot during this time, during this pandemic, and how you feel like you can further scale up. Is that kind of transition already completed at this point?
Well, we are right now a subscription services business, but you're 100% right, Frank. We started out as textbooks. That's how we started to develop the brand. And an interesting note on that is we actually announced on our earnings call that we have exited owning physical textbooks. And so that was a trend that's a transition that we started 7 or 8 years ago. We are now out of it. We're going to just strictly a commission business. And so when you talk about the percentage is 91%, that'll be closer to, over 95% over the next, well over 95% starting in 2023, where everything comes from services and primarily subscription services. And so, yes, we while we offer textbooks, that is not the core of the business, and that's not where the core of the profits are.
Andrew, I wonder to what extent you're seeing potential in the B2B side of the business. I know you acquired an online language service. Obviously, that's a potential with companies, as I understand. You've also got a partnership with Guild. I mean, how much growth do you see on that front? And is that something that Chegg leans into as you see student enrollment drop in universities and colleges?
Well, absolutely. When you look at the language skills area, and when you look at an acquisition we made maybe about 3 years ago, Thinkful, which is a skills-based, the parts of those businesses that are actually growing the fastest, to your point, is the B2B side of the business. We acquired a company called Busuu in January, and that while that is the smaller part of their business, it's the fastest growing part, where the B2C is growing growing slower. And likewise, on our Thinkful side of the business with Guild, as you'd mentioned, that has been a fabulous relationship where it gives us an opportunity to distribute and have Guild sell or at least distribute our skills products through their 4,000 companies, and we've seen that's been a great success, and we anticipate that we'll be providing much more content through Guild over the next several years.
Well, we appreciate you coming on this Friday. Andrew Brown, Chegg CFO.